And I think Americans are facing a greater threat than just about everybody else. It's the US dollar that I think is going to be the epicenter of the next crisis. I rose to a bit of notoriety for predicting the 2008 financial crisis. Well, it's the same dynamics that created that crisis that are leading to this next crisis. And it's just much worse. And the consequences are going to be much greater for the people who aren't prepared for it. So I'm trying to get people out of dollars, out of dollar assets, build good portfolios outside the US, foreign equities, both developed and emerging markets, foreign bonds, take advantage of what I think will be a historic rise in gold and silver prices by having exposure to those metals, but also to the companies that mine them and make a profit from selling them. So I think there's not only a way to protect your wealth, but a real way to enhance it if you understand the dynamics of what's really going on, and then you position yourself for the end game. The most risky things to own really long term is just the paper, which would be the physical dollars, right? Dollars stuffed under your mattress, right? The cash you have, are lying around. But also any paper dollars, where you've loaned them out to somebody and you own a bond, whether you own a U.S. Treasury bond, a municipal, bond, corporate bond, whatever, paper that you're just going to get paid back dollars in the future, right? That's going to get wiped out. If you have, cash value in an insurance policy, maybe you have a whole life policy with a cash value surrender policy, an annuity, a fixed annuity that pays you a quantity of dollars, right? All of those things, that's the worst thing to own because inflation just wipes those out, right? Then I think if you own U.S. stocks, all right, you own a real asset because you own a business and all their plant and equipment and whatever they own, their intellectual property, and it's an operating company. But to the extent that most of their customers are in America, they're just going to be earning dollars. And while they may be able to raise their prices in an inflationary environment, they may not be able to raise them enough to compensate for the loss in value, especially if we're in a big recession with a lot of inflation. So rather than taking refuge in U.S. stocks, and same thing would go for real estate, right? Because if you own real estate, right, you're out of paper, you own something real. But if you want to rent it out, who are your potential tenants? Well, they're people that have dollars, right? I mean, it's hard to rent out your U.S. property for Swiss francs or something like that. So what you want to do is you want to get income producing assets outside the United States that generate income in other currencies, not the dollar. And you want to be in countries that have better, underlying fundamentals. They're not going to have the currency crisis that we're going to have. And they're not on the verge of, going all in on socialism like we are, So you can look at other places of the world that are freer, that have less regulation, lower tax rates, lower deficits, better balance of trade, creditor nations instead of debtor nations. And invest there, buy stocks there, buy real estate there. You see, I actually care about the country and I want it to prosper and succeed in the long run. Whereas what Powell and Yellen want is to kick the can down the road, to the next election. So all they're trying to do is delay the day of reckoning. They don't care or even understand how much worse that day is going to be because of the delay. Because all the delay does is allow the underlying problems to get worse. And that's basically what they're doing.
Now, what happens if inflation doesn't come, though? Does that start throwing a wrench in the gear of we need to move away from the dollar? I mean, the odd thing that's happening now, and we've seen obviously over the last 10, 11 years, is we've been in this quantitative easing phase, actually probably more like 12 years now, and that inflation hasn't come yet.
Well, that's because the inflation is already here, right? You don't have to wait for it to arrive. Quantitative easing is inflation. It's just a different name for the same thing, except that, people don't necessarily like inflation. So if the Fed said our policy is creating inflation, right? People say, well, wait a minute, I don't like inflation. That makes my cost of living go up. So instead of saying we're going to create inflation, they'll say, oh, we're just going to do quantitative easing. Oh, that sounds pretty good, right? But that's inflation.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
Because inflation literally means to expand. That's where the word comes from. Inflate, right? A balloon inflates, right? It expands. You're filling it with air. Prices don't expand. Right? They can go up, they can go down, but they don't expand. So what is expanding? It's the money supply, an expansion of the money supply, right? Deflation is a contraction. Just like a balloon can deflate, your money supply can deflate. Now, we don't contract the money supply, we keep expanding it. So we keep creating inflation. Now, right. Now, one of the results of expanding the money supply is that prices will go up, right? So that's an effect of inflation, but that's not the inflation itself. So the question that you're really asking me is, when are we going to see all this inflation show up to a greater degree at the supermarket, right? Stuff like that, right? And it's hard to say, right? I mean, we know eventually that's where it's all going. But right now, a lot of the inflation has pushed up asset prices, right? That's also an effect of inflation. Stock market is going up because of inflation. It's not because of higher earnings or a better economy. It's inflation that is bidding up stock prices. The same thing with real estate prices. Same thing with bond prices or all sorts of collectibles or rare things or cryptocurrencies. I mean, inflation is driving all these prices up. But eventually, all of that inflation is going to go into consumer goods because assets are a means to an end, right? People, let's say you buy a stock. You're not buying a stock because you want to hang the certificate on the wall and admire it, right? You're buying a stock because you hope to earn more money that you can use to buy more stuff. So ultimately, the stock is a means to get more stuff. So when people want to sell their stocks and buy the stuff, that's when the price of the stuff really starts to go up. Thanks to the Fed, everybody is so levered up with debt. If they tried to pull the rug out from under that house of cards, the whole thing is going to collapse. So the Fed is caught between a rock and a hard place. And so inflation is going to run rampant, which is why you better be prepared for it.
What do you say, though, to the potential that, hey, we could keep printing money if the velocity of money goes down? What if people are becoming more investor savvy or more saver, pay down debt, and maybe they're just not spending as much, and maybe that's not going to lead to higher prices. So maybe we just keep printing.
You can pretend that that's the case until you're confronted with a crisis. And the problem is, if you do that, it's like, you've got all this rope. But if you fasten it into a noose, and jump, put it right, you're gonna hang just because you have a longer rope. It just, as long if there's enough distance between the limb and and the ground, right? That's what we've done. We just assume that, we can postpone it, but we can't. And the problem is, once inflation becomes a problem, we have no way to deal with it because there's only one thing you can do, right? So interest rate and prices really start to rise, right? The Fed says they're comfortable with 2% inflation. Right. Now they say, it's okay if it goes a little bit above. What that is, we're not really sure, because they don't know. But let's say it's 3% and they say, okay, that's not that bad. It's not that far. We were at 1, now we're at 3. It averages out to 2. Then it gets to 4. Then it gets to 5, 6. At what point, oh my God, it's 6%, it's 7%. We need to do something. Now, if you let inflation get to 6 or 7%, how do you stop it? Well, maybe you have to raise interest rates to 10% or 15%. But we can't even afford 1%. We have so much debt, it's impossible. So once that inflation genie is out of the bottle, we don't have a prayer of putting it back in. And I think that's one of the reasons that the Fed pretends that it wants more inflation is because it knows that it can't do anything about it. They want to pretend that, they want inflation. That's a good thing. The reality is that's an awful thing, but they're not going to do anything to protect us from it because they've set up a situation where in their mind, the cure for inflation is worse than the disease.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.